Hi, starting today we're going to do a quick review of your favorite subject, a subject called Principles of Accounts. And I want us to start really from the beginning of our unit for the BGCSE exam as we move along. And the first thing you have to know in this subject is about the books that we're going to use. And the books that we use in accounting, they are called books of original entry. Books of original entry. And why are they called books of original entry? They are called books of original entry because these are the first set of books that we would enter our transaction in as an accountant. After we have entered the transaction in these books, then later on we are going to transfer these transactions to different books. Book number 1 is called a journal. And we're going to later on go through these books and you're going to see exactly what each of these books look like. The journal is used to record items that are much less common and sometimes complicated. They are not recorded in any other book of original entry. So the journal, and it's called a general journal. It would be used to record items that I would not record in any of my other books of original entry. Number 2, this one is called the sales daybook. And my sales daybook is used to record all my sales transaction. So everything that says sales that has to do with the business would go into what is called my sales daybook. Book number 2 is called my purchases daybook. My purchases daybook would be used to record all the entries that I would put in all my purchases entry for the business. Of course, if we're operating a business, we're going to be buying and we're going to be selling, and so of course here goes the sales daybook, purchases daybook. Then there's what is called a return outwards book. Return outwards book, and this book is also sometimes referred to as the purchases return book. And this book is used whenever I purchase some goods and I'm not quite satisfied with it and I decide that I need to send this back to the seller, and so this is going to be called my purchases return book. Then there's the return inwards book. Return inwards, and of course you could guess that this is also called sales return. So if I sell something and somebody is not happy with it, they would also return it to the company, and that is going to be called the sales return book. There is the cash book, and the cash book is the book that is used to record both my cash and bank transaction. It's called the cash book. And then finally we have what is called the petty cash book. And why is it called the petty cash book as against the cash book? Normally in any business you have a small sum of money that is kept in the business that we use without having to go to the bank. Big sums of money would go to the bank, and so for the bank is either I'm going to debit that account with some cash or I'm going to credit that account when I pull a check from the account, etc. That's my cash book. But when it comes to my petty cash book, this has to do with little bits of cash that I would keep in the business for things like buying a stamp, buying a few paper clips, things like that. I don't need to go into big cash for those. Usually petty cash book deals with things that is going to cost us something maybe less than $50, the petty cash book. So let's just do a quick review. Books of original entry, the journal, the sales daybook, purchases daybook, return outwards book, which is called the purchases return, the return inwards book, which is called the sales return, the cash book, and then the petty cash book. And after this, our next lesson is going to be looking at each of these books individually, because we have to look at how each of these books are used in the company.